Welcome to another stage analysis video. It's Wednesday the 15th of February 2023, and this week's midweek video is going to be a special group focus on the software stocks. As part of the stage analysis method is what we call the forest to the trees approach, where we look for some of the strongest group themes coming through as well. When the market is in gear, we then look to the group themes before delving into the individual stocks. Because I do a daily watch list, we do sometimes this. I do get the group themes coming through from an individual stock basis as well. So one of the ways that we see what group themes are starting to develop is by what stocks are showing up in the watch lists. And over the last month or so, it's been heavily in the software names and the semiconductors especially. So last week I did a video on the semiconductors on the midweek video covering that. Obviously had a strong week since then, continuing to move out in early stage 2, and they're more developed than a lot of the software stocks, but we are starting to see a lot more software stocks starting to break out, especially with some earnings gaps, especially over the last week or so as more and more start to report earnings. So we started to see more stage 2 breakout attempts happening within the group. Can see from the IGV chart here, which is one of the major ETFs that covers the group, obviously starting to attempt to move into early stage 2 here. So going to cover been through the group today, had a look. There's 358 stocks listed in stock charts in the Nasdaq and the NYSE, stocks that are not including the over-the-counter stocks. So it's a big old group. So I've cut it down to around 40, I think about 47 stocks for this, and focused in on some of the recent stage 2 breakouts, especially for the first part of the video. Just go through and see where some of the stronger areas are and refine our watch list for the group a little bit more and see what's leading. I've avoided obviously the laggards by culling them out already and just focusing in on what's going in on the group. So okay, let's begin by looking at the group ETF as a whole. This covers the last 3 or so years here, 3.5 years. It's been through all of the stages. It did have a big stage 4 decline recently, so you can see the stage 4 decline through 2022 started to flatten out mid-year, but did undercut a little bit. Didn't finally start to show pure stage 1 characteristics until much more recently, and we've now had an early breakout attempt, which is still underneath a resistance zone from the prior basing effort. So, but you can see the 30-week moving average here has started to turn up. The 10-week moving average still below that at the moment, but starting to perk up a little bit. But as I said, the group itself is still under near-term resistance from that original, we got there, March 2022 low there. You can see the relative strength versus the S&P 500 here at the bottom. So the black line is the relative strength versus the S&P 500, and this blue line here is what we call the zero line. So in Stan Weinstein's original book used to use the Mansfield charts, and on those we had the Mansfield relative strength indicator, which was had a zero line across, which was the 52-week moving average of the relative strength, and you'd see it would oscillate above and below. So this is an unflattened version of that. Basically, the zero line is the 52-week moving average here. So you can use it as a flattened version. If we go onto a trading view here, I can flick to the Mansfield version, for example, here, and you can see just perking up above the zero line here. So this is your 52-week moving average, but we can obviously also see this as an unflattened version. So you can see this and this are exactly the same. It's just a flattened version and an unflattened version of the Mansfield relative strength. So go back to here, you can see stock charts only has the option to use the unflattened version, which is actually more useful than the flattened version because the slope of the moving average can help you obviously identify whether it's too early or not, as we want to see it either when we see stage 2 move, we want the zero line here, the 52-week moving average, to be flattening and then starting to rise once more. So at least flattening, which we can see here, it's just starting to do as it's crossing over here. So still very, very early. So that indicates that there's more resistance to get through, which obviously we can see with the multiple bases we've had on the way down here with the IGV. So we go back to the trading view chart here again. This is, as I said, with the Mansfield relative strength flattened version highlighted here. So it's turned to grey. So obviously that is starting to flatten here, but it's moved above, but it isn't yet rising. So it goes green when the zero line is rising. So at the moment it's grey because it's not yet rising. If I change this to what we call the stage analysis technical attributes chart. So this has the same indicator highlighted in 3 different ways. So the original indicator here at the bottom breaks it down into 10 separate attributes that we look for, technical attributes that we look for in the stage analysis method. So, and then that gives it a score between 0 and 10. So at the moment, as you can see, we're on a SATA score of an 8. You can see here from the combined score, we've been rising since the October low here. It's moved from a 0 to an 8 since the October lows here. So starting to move into potential stage 2 zone here. We had the breakout 3 weeks ago there above resistance. So starting to move into early stage 2. But I have dropped in the anchored VWAP. This is what Brian Shannon developed, and he's just written a new book on that, which I haven't yet read. But I do find the anchored VWAP concept very, very useful and use it quite a lot in my charts. So I just wanted to drop that on to see. This shows you where the volume weighted average price has been, and I've anchored it to where the stage 4 breakdown happened. So this was our stage 4 breakdown here this week here. So I've anchored it to this week here, and you can see obviously the recent moves, all of the moves obviously peaked at the anchored VWAP there, and we're still not quite through that yet. So although the stage analysis technical attributes, the SATA score, has improved recently, we're not yet through that volume weighted average price. So we want to see obviously a strong move through this area, ideally to give a more convincing move into stage 2. But you can see there has been obviously promising development here with this improving dramatically, and obviously it's much higher than it was over the entire course of 2022, where it was below. For the vast majority of the time, it was in the lower zone with a score of 3 or less. So that indicates it was in stage 4 zone. So when we're above a 7, tend to be in more of a likely to be in stage 2, not always, but when you're in a 7 and above, as you can see, when we're in a stage 2 advance here, you can see that the stage 2 move through this period here. We did have a few little peaks below where it drops back down again, but the vast majority of the time, the stage analysis technical attributes will be on a 7 or above. So we are in a much better position currently with this. If you drop down to the daily chart, you can see this in a little bit more localized view. Actually, might drop in even more than that at the moment. Go down to a 195-minute chart here. So let's take it out a bit. 3 months, maybe 4 months. 2.6. So you can see this recent base structure through here. So you've got your Wyckoff characteristics through here with selling climax, automatic rally, secondary testing, some up thrusts, last point of support through here, and it's started to move out. We've had a new stage 2 breakout attempt through here on this intraday time frame. If we go back to the daily chart, on this, you can see this has got what we call the free ATR bands on it using the Keltner channels. So this middle line here is the 21-day exponential moving average. Then each one of the bands here is 1 ATR from that. So when you're in a short-term uptrend, you are above the 1 ATR level. So it does get little drops below. When you're in a downtrend, you tend to be below the minus 1 ATR level. So you can see short-term downtrend, majority of the price action tends to be below the minus 1 ATR. So you can see at the moment, we've got this short-term uptrend. We're above the 200-day moving average, moving through some near-term pivot levels here. So we are attempting to move out into stage 2. Not quite totally convincing yet. Still, as I said, still got obviously old resistance to get through. Not yet fully through, and the relative strength is only just peaking through the zero line, so only just starting to outperform on a 52-week basis versus the S&P 500. But you can see year to date has definitely been outperforming here. All right, let's move on to some of the individual stocks that I've picked out at the moment. So first of all, let's look at the performance chart of those individual stocks that I'm going to show. So on a year-to-date basis here, You can see all of them, if we scroll through here, have basically been outperforming the S&P 500. Only a couple of them here, PWSC and Squarespace, have underperformed the S&P 500, but the vast majority of them have outperformed the S&P 500 dramatically year to date. AI, for example, is obviously excessively, with the short covering rally that's had, over 100, almost 120% there. But you can see many stocks have had 40-50% moves or greater compared to the S&P 500 since the start of the year. So if we go into the chart list view, let's start having a look. There is a number of stage 2 breakout attempts at the moment, so which have been coming up in obviously the watch list scans for a while now, as they've been developing in the base structures, and now they've started to attempt to move out into early stage 2. So CFLT, obviously one of the stronger looking ones of these stage 2 breakout attempts in the near term here. 16.23% move this week, so attempting to move through the stage 2 level here. You can see relative strength just starting to peak above the still declining zero line here. So if we look at it from on the SATA chart here, you can see its SATA score has gone up to a 9. It's the strongest score that it's had in its entire life cycle. So as you can see, it was an IPO back in 2021 there. So still relatively young stock here. Go back to the individual charts here and stock charts and drop down to a daily chart here. You can see the move out, attempting to move out into stage 2 on Tuesday here and following through today. Volume's not dramatic at the moment though. Relative strength, like the actual group itself, only just peaking back above the zero line. So it's a tentative stage 2 attempt at the moment. It hasn't yet fully gone through, and we need to obviously see this week close strongly, and ideally you want to see stronger volume than we have seen, although there has been in the run up, there's been some stronger volume coming in, so it is showing decent characteristics here, but still underneath the IPO week low at the moment, so got some work to do in this one. Another one that's been coming up a lot recently, broke out into stage 2 3 weeks ago. So this is Monday.com, been highlighting this for a while in the watch list. Again, breaking up through, we've got a flattening zero line here, so the 52-week RSMA flattening out here. It's been outperforming the S&P 500 year to date, starting to strongly outperform over the last month here. You can see the stage 1 base that developed. So with stage 1 bases, those who watched the videos before, you can obviously in hindsight draw your big base all the way across, but in real time you have to just go with what you get. You get selling climax, you get an automatic rally secondary test. This is where you start to draw your base structure. You might then get up thrusts, get changes of behavior, etc., spring type action at the bottom of the base, but you can see the majority of the price action did form through this. So the best way when a stock is still in stage 4, when you get the phase A of the base structure developed, so the selling climax, the automatic rally, secondary test, this is what we call phase A in the Wyckoff method. So that gives you your points to start to draw a base structure. And at that point in there, it's still in stage 4. You're not in stage 1 yet. We don't start to move into stage 1 till we generally get a move above the 30-week moving average. We start to get closes above. So this up thrust here just about potentially might have started to trigger stage 1A, this area in here more so. So this is you're starting to move into stage 1, but often with the first move into stage 1, you then get a reaction back towards the bottom of the range, and it can undercut, even make a continuation break and reverse back up into a spring. So this is your classic Wyckoff structure that we're seeing in Monday here, and then spring type action starts to follow through. You get your sign of strength rally out into a stage 2 breakout. So as I said, a lot of the time you'll get a majority of the stage 1 base will actually form when the stock is still considered stage 4, and it's only considered stage 1 once it starts to firm up a little bit, the moving averages start to tighten up or cross over, etc. So it can be more difficult in real time. So you look for those triggers, those initial signs of a base structure developing, your selling climax, your automatic rally, you draw your structure, and then you see how the price action starts to play out against that. So Monday, as I said here, breaking out into stage 2 recently. You can see the move up. This is your stage 2 breakout area here. Not dramatic volume on it, actually quite weak volume on the breakout, but you can see it's followed through strongly. Volume started to come in over the last few days. I think it did actually have earnings on these days. I think that was the earnings day there, potentially. Let me go to simple summary on that. The 13th, yeah. So that was earnings day. So volume started to come into it, and then you can see it's starting to tail off over the last few days as it's continuing to rally, but in the shortening of the stride there. So if we look at it from the ATR candles, it's actually touching the free ATR level at the moment. So it's now extended in the short term. So we'll be looking for it to consolidate, start to actually pull back in. We want to see it start to drop back below the stage 2 level low. So ideally, we want to see a stronger consolidation above the earnings day bar, particularly. So somewhere in this range, ideally, would be good with Monday.com. Move on to Microsoft. So obviously one of the mega caps from the software group, attempting to move out into stage 2. This obviously has the AI theme with it. It's the only stock that actually has chat GPT. I think lots of people are trading the AI stocks that have got nothing to do with chat GPT, just on the actual theme. So they're trading it a bit like the metaverse type theme that we had last year, just all hype and etc. But Microsoft's the only one that's actually making an investment in the actual thing that's moving it. So, but it is a mega cap, so moves are much, much smaller, but it does have obviously tendency to trend in stage 2 when it moves into stage 2, and it is now attempting to move into stage 2 here. You can see the relative strength has regained the zero line here, which is flattening, still slightly declining there. Going to on the SARPA chart, you can see obviously the huge stage 2 advance that it had over multiple years there. The stage 4 decline has been fairly contained and starting to move back out here into early stage 2, but not yet triggered a full breakout yet. But the SARTA score is up to an 8, so it is looking promising in the near term that it could continue into stage 2. If we look at it from a daily perspective again, you can see that the attempt here still struggling to push into stage 2, so we want to see a continuation of that. Net, this is another one that's been coming up recently, so broke out into stage 2 this week, just breaking the near-term pivot here that's formed above the 200-day moving average. You can see on the weekly again, it's another one that's only just breaking above the zero line here, which is only just starting to flatten out. So again, if we look at this from a SARTA chart perspective, you can see breakout week this week on here on the SARTA. We've got a SARTA score of a 9, so dramatic improvement through here compared to what we've seen over the course of the 2022. It hasn't been this strong since the top, basically. This was the last time it was that strong, but obviously it's in a much, much more favourable position here. So go back to the daily chart on this. You can see here, recent pivot above the 200-day moving average here. The 21-day moving average is just moving above the 200-day here. The 50-day moving average is still below, so we've got a stacking order issue here at the moment with the moving averages. We want to see that improve. So ideally, we want to see this start to consolidate. It's obviously getting a little bit extended in the short term above the free ATR level here. So you can see on the ATR bands, could obviously run up a little bit more, but ideally we want to see it consolidate above that stage 2 breakout level there, ideally, so not dropping much back below the 65 level if it does start to consolidate and form a base structure through here.